Hello everyone, welcome back to our next topic of fundamental account, that is interest on drawing. This concept is very important and this concept come 100% in the exam. So today in this video we are going to study about how to calculate interest on drawing and what are the various methods which are used to calculate interest on drawing. So let's get started.
Before learning the calculation of interest on drawings, we should understand its meaning first. Drawings are money or assets that are withdrawn from a company by its owners for personal use and must be recorded as a reduction of assets and owner's capital. Drawings can be either in cash or in kind. It is a temporary withdrawal which is to be returned by the partners with interest. To understand the concept of the drawing account and its utility, let's start with a practical example of a transaction in a sole proprietorship business. Assuming the owner, Mr. Alex, started the proprietorship business like XYZ enterprise with an investment, or you can say the equity capital of $1,000. The balance sheet of X, Y and Z enterprise as on 1st April 2021 is as below. You can see the balance sheet. In the balance sheet we have assets and equity and liability side. In the asset side we have fixed asset of 300, it's in dollar. Current asset 700, cash is of 200, inventory is of 300, and last short-term investment is of $200. So we have a total asset is 1,000. In the equity and liabilities side, we have shareholders equity that is $1,000. Suppose Mr. Alex takes out $100 from the business for personal use during the financial year 2022. The impact of the above transaction on the balance sheet will be a reduction in the cash balance and the owner's equity capital by $100. Therefore, the balance sheet after the transaction will look like this. Again, we have assets and equity and liability side. In the asset side, we had fixed assets, current asset and cash. You can see in the cash column, we had $200. If he withdraws $100, then we have the left balance is 100 and the other items will remain the same, and the total asset of the company will be decreased by $100 and that become $900. And in the equity side you can also see the owner's equity is also decreased by the same amount, that is the $100, and it become also 900. Means the example proves, however, in proprietorship or the partnership, the owner generally may do multiple transactions during a fiscal year for personal use. There is a mechanism to record such transactions and adjust the enterprise balance sheet for such transactions where the owner uses business resources like cash or goods for their personal use. The owner uses business resources such as cash or goods for personal use. Now let's come to the topic interest on drawing and how it is calculated. Interest is to be charged on the amount of the drawings that are withdrawn by the partner. No matter how many times a partner withdraws money in a year, he will have to pay interest on it. Interest is charged on drawings made by the partner only when there is an agreement among the partners in this regard. First one is the interest on drawings should be charged from the date of withdrawals of the amount till the date of the preparation of the balance sheet. However, in case no date of withdrawal is mentioned, interest on drawing should be charged for the half year, that is 6 months, on the whole amount based on the assumption that drawings are made evenly throughout the year. And the second one, the rate of interest will be the rate agreed by the partners. interest on drawing is to be charged when specifically provided in the partnership deed along with the rate of interest. Okay. Third is interest is an income for the firm and an expense for the partners, and hence it is credited to the profit and loss appropriation account of the firm and is deducted from the partner's capital current account. Right? So that was when the interest on drawing is charged. Now let's see how the interest on drawing is calculated. Interest on drawing is an interest charged on the amount withdrawn by the partner for personal use. Businesses use various methods for calculating interest on drawings according to the need and the frequency of drawings in a particular year. Drawings by a partner may be broadly divided into two categories, regular drawings or even drawings, and irregular drawings or uneven drawings. Irregular drawings means drawings of same amount or different amounts at irregular intervals. And the regular drawings, it means drawings of same amount at a regular intervals. Interest on drawings when drawings are made at irregular period or of different amounts. Product method of calculating interest is followed, and when drawings are made of same amount at regular intervals, interest on drawings is calculated using average period method. The two methods of calculating interest on drawings are, first one is the product method and second is the average period method. Both the methods are discussed. First is the product method. When unequal amount is withdrawn at different dates or when there is irregular drawings, interest on drawing is calculated with the help of simple method or product. In simple method, interest on drawings is calculated for the period the amount is withdrawn. The interest is calculated with reference to each drawing. In the product method, under this method, the amount of drawings is multiplied with the number of months or number of days as the case is. It is drawn. The product so obtained is totaled and interest is calculated thereon for 1 month if the period taken is in month and for 1 day. If the period taken is in days, the formula will apply. Interest on drawings is equal to total of product multiply rate of interest by 100 multiply 1 by 12 or 1 by 365. 12 is for 12 months and 365 is for 365 days, which makes a 1 year. Let's take one question to understand the product method or simple method of interest on drawings. In a partnership, partners are charged interest on drawing at the rate 15% per annum during the year ended 31st March 2021. A partner withdraws as follows. So in the question we have been told that interest on drawing of 15% will be charged on the partner. In this question we have been told that how much amount was withdrawn by a partner on which date. See, on 1st May he got, or you can say he withdraw 2000. On 1st May he got rupees 2000 withdrawn. Then he withdraws 5000 on 1st August. On 30th September he withdraws 2000. On 31st January he withdraws. On 31st Jan he withdraws 6000, and on 31st March he withdraws rupees 2000. And last, we are asked to what is the interest chargeable from the partner. Now here we are asked to calculate the interest on drawing, and when we have given a fixed date, then we have two methods to calculate the interest on drawing, that is simple method and product method. So we will study these two methods. So let's start with the first simple method. In this we told that according to the dates given to us, we have to calculate the interest on drawing. Now we have to see how a partner withdraws money on 1st May, then how many months are there from 1st May to 31st March. If he uses that money from 1st May to 31st March, then according to the number of months that money is used, we will calculate the interest on drawings accordingly. So how do we count for the months? When did he withdraws money on 1st May? Then from 1st May to 31st March, we will count till 31st March. Like May, June, July, August, September, October, November, December, January, February and March. So how many months it becomes? So it becomes the whole 11 months. Here we need to understand that a partner is withdrawing rupees 2000. For how many months? For 11 months. Then we have to calculate interest on that 2000 on the basis of 15% of 11 months. On the basis, so we will calculate it in this way: 2000 multiplied 15% multiply 11 by 12, that means 11 out of 12 months. What is 11 months? He withdraws 11 months out of 12. So first our answer will come, that is 275. Similarly, we will calculate the interest for the next date. Now how much is he withdrawing? That is 5000. And which date is being drawing on 1st August? We will count the months from 1st August to 31st March. So it is, now we will calculate interest again according to these 8 months. 5000 multiply by 15%, multiply 8 by 12, and it will come rupees 500. In the same way, we will calculate all the interest one by one, which you were asked in the question. So from 30th September to 31st March, 6 months are made. So by September 30th, 2000 multiply 15%, multiply by 6, multiply 6 by 12. So by September our interest will come to rupees 150. In the same way, when will we take out January 30 and it become our 2 months, January to 31st March? We calculate 2000 multiply 15%, multiply 2 by 12, and interest will be again 150. Now look here, on 31st March he took out the last money. He does not have any month left after 31st March. March is the last month of accounting year. When we do not have any month left, we write it as 0. So on this 2000 multiply 15 multiply 0 by 12, we will get 0 interest. So now what we have to do in the last, that whatever interest we have taken out, we have to add them. So after add, our answer will come, that is rupees 1075. So this is our answer, interest on drawing by simple method, that is rupees 1075. Now we have to solve the question in the same way with the product method also. Product method, I already told you, product method is also very easy way to calculate the interest on drawings. The only difference in this method is that we have to multiply the amounts that we have calculated. See, we took out the months from May 1 to 31st March, that was 11. So according to this method, we need to multiply 2000 with 11 months first. After we will get it 22,000. Similarly, in the second case, it was on August 1st. It was on 1st August to withdraw rupees 5,000 for 8 months. So we will multiply 5,000 with 8. We will get 40,000 as a drawing. Similarly, 2000 was withdrawn on 30th September. We'll multiply it with 6 months and we will get 12,000 as a in drawings. In the same way, for the January month, we multiply the amount of 6,000 with 2 months of January to March and we will get rupees 12,000 again. And withdrawing for the March month, so we don't have any month in the March month because it was the last month. When we multiply it by 0, then our answer will also be 0. We are doing multiplication here, so we will call it product method because product method means multiplication. So after we multiply in the last, we will total of all these drawings and we get 86,000. So now this means that we have to calculate interest for 15% over this amount according to the product method. Now here it is to be remembered that when we did the calculation above, we had multiplied with 12 months. Then we did not divide it by 12 like we used to do in the simple method. We used to divide each calculation divide with 12, that is 12 months. Here we have to only multiply it, not divided by 12. Therefore, after totaling all of these products, we will divide it with 12. So we will get the same answer, that is 1075. So your answer should be the same with the both methods. Now, so at the last we can say the procedure for calculating interest on drawings under product method is as follow. Multiply each amount withdrawn by the relevant period in months to find out the individual product. Find out the sum of the all individual products. Third is the calculate interest at the prescribed rate for 1 month by using the following formula. Interest on drawing is equal to sum of product multiply rate of interest per annum multiply 1 by 12. So this was the product method which is used in calculating the interest of drawings. Keep watching the next videos. In the next video we will discuss about the second topic of interest of drawing, that is average period method.